Hey everyone, welcome back. I hope you guys are doing well so far with this Christmas coming up. Hope it's not been too stressful finding those much needed Christmas gifts right now with all the chaotic shoppers, and yeah, I hope that's been good. But with this holiday season in full swing, I've been really refining my trading strategy using Brett's settings. So in this video, I'll walk you guys through how I've adopted his configurations to fit my style, and more importantly, how I use them with semi-automated trading to manage risk effectively. Trading itself during the holidays can be unpredictable. Market swings between periods of calm and sharp volatility or news breaks out. But that's where Brett's approach really shines, because his settings are really ideal for adapting to these rapid fluctuations while minimizing noise in the order book. So let's dive right into the details. Let's first clarify something. In this video, I'm not manually adjusting every trade as it unfolds. So the software is really doing the heavy lifting for me by executing the trades based on the preset stop losses, profit targets, and trailing stops within this video. So this is not a set it and forget it system. So let me repeat, this isn't just an AFK machine. Semi-automation means you still need to monitor the market and assess its behavior and adjust settings on the fly. Why is this important? Because markets can change quickly. Volatility, volume, and momentum can shift in the seconds, and settings that work in the morning might not be as effective as they are in the afternoon. So that's why I've been spending hours studying the L2 Azimuth settings to better understand how they behave in different kinds of conditions and how to adapt them to suit my strategy. Think of it like driving a car with cruise control. The software is your cruise control. It keeps you moving and handles the basics, but you still need to steer and watch for traffic and adjust your speed when the road conditions change. If you set it and take your hands off the wheel, you're just gonna crash. And you'll see when I went AFK to work out as a test, I ended up losing even more money when I wasn't monitoring the software. Now let's get right into why you clicked on this video and talk about the settings. So starting within the data series, Brett set his to 10 because it's based on the days loaded, ensuring enough historical context without unnecessary clutter. Within the strategy settings, however, with a limit order offset of 2 and a cancel limit order ticks 4, this is my approach to doing this. Brett was a little bit different. He used a 0.3, but with this, I feel like it ensures scanners are taking more appropriate trades and reducing false signals, which in return helps lower the commissions. So it's all about precision here. So for the scanners, we're doing the classic 2.5412. So this ensures counter spoof trades are well calibrated to filter out unnecessary signals and optimize the profitability. Trespass, we're doing 2.25 and 2.5. I've adjusted these trespass settings slightly to better adjust and handle quick shifts in momentum during less volatile periods. And Dex-array, instead of using buy sell order 5, I switched to 7, and the minimum aggressive orders to 2. Dex-array has been super accurate for me with these settings, so I'm keeping it on the standby for now, but these settings will vary as I refine them. Now for risk and microstructure settings, Brett's risk tolerance threshold is set to 0.4 and the microcongruity threshold is at 0.51. These ensure the trades align with the market structure, while the number of bars for machine learning is set to 1,587 with a microstructure bias probability threshold of 0.65. Now let's talk about the ATM settings for each scanner. Counter spoof is using an order quantity of 4 with a stop loss of 3 ticks and a profit target of 3 ticks. Within the stop strategy settings, the profit trigger is 2 ticks with the plus at -1 tick. So these settings focus on the consistency. So by having a tight stop loss and a trailing stop that activates after just 2 ticks of profit, I'm reducing exposure to sudden reversals, so this helps minimize risk even in noisy order books where rapid fluctuations can trigger false signals. For Dex-array, I used a stop loss of 4 ticks, a profit target of 3 ticks, and a stop strategy with a profit trigger of 1 and a trailing stop of -1. So this setup balances risk and reward by allowing trades to ride out a little bit small fluctuations while locking in quick profits. It's designed to minimize the risk from sudden reversals or market noise, keeping trades efficient. And lastly, Trespass with another order quantity of 4, a stop loss of 4 ticks, profit target of 3 ticks. And stop strategy, the profit trigger is 1 tick and the plus is -1 tick. So Trespass requires a bit more flexibility due to the nature of its signals. A slightly wider stop loss helps avoid premature exits, while the 1 tick profit trigger ensures quick gains are locked in before volatility can erase those. Now let's look at these settings performed within my testing for the day. So there's 2 different instances I want to talk about. The first was the $3,525 of gross realized P&L with a net profit of $1,736.84, with the commissions being $1,788.16. So that commission to gross ratio is about 50.7%, but the retaining 49.3% of gross P&L after commissions is a pretty good outcome. The tighter stops and consistent adjustments kept the risk under control, so we still had the 1700 at the end for us. Now looking at this other instance, I actually left the settings to do their thing and I let them sit. I'm not even looking at my computer or anything like that, and I went away from it for a couple hours and I came home and my gross realized P&L was $5,450 with a net profit of $695.12, with the commissions being $4,754.88. So that commission to gross ratio is much higher, with it being at 87.3%, with the retained gross P&L percentage being at 12.7%. So this really does highlight the danger of overtrading, especially being away from your computer and not realizing what is happening at the time. So in the end, your commissions are going to eat you alive, and you're only going to have a net profit of $695 in the end. So this really highlights the danger of overtrading. So without carefully monitoring and adjusting the commissions, they can really eat in your profits, so leaving very little margin for a recovery. Overall, I've learned that the semi-automation requires attention. So this software handles execution, but success really depends on your ability to monitor and adapt to settings. This isn't about just walking away, it's about being engaged. Also, smaller losses, bigger wins. Tight trailing stops and profit triggers protect against major losses while capturing small consistent gains. And of course, optimize for the specific market. Every market condition demands a different approach. By studying these settings for hours and looking at different kinds of videos on different content that people produce, I've found different configurations that might work for both low and high volatility. If you guys found this breakdown helpful, drop a like and let me know in the comments how you're managing your settings during this holiday season. And I'll see you guys soon.